Alrighty, so here's a very basic explanation of how taxes work. So in our case, we have 20 bars of income throughout the year, and our tax rate is 1 bar for every 5 bars. So you're working at McDonald's, you make 20 bars throughout the year, and every paycheck they take a little bit and a little bit and a little bit more. So instead of getting 20 bars of income throughout the tax year, like it says on your employment, you only get 17. Now, why might that be? Well, throughout the tax year, federal taxes are withheld from your paycheck and sent to the IRS. So in reality, even though we made 20 bars of income, we only get to keep 17 throughout the tax year. Now, of that 17 that's left, some of it has to be used on food, clothes, rent, etc. So all of those add up and add up and add up. So at the end of the year, you only have 1, 2, 3, 4, 5, 6, 7, 8, 9 bars of income to actually keep for yourself. We will label this orange. So even though you got taxed on all of your income, the only income you really have is a lot less. So what do? At the end of the tax year, you can actually go through all of your receipts and have it deduct your income based on how much living expenses you had. However, this requires a lot of receipts, a lot of effort, and if the IRS, feels something is fishy and asks for all of those receipts, you're in for a lot of trouble because it's really, really hard. So instead, the IRS developed the standard deduction. This is a standard amount based on your filing status, whether you are single or married. So let's copy over our income and compare it to the standard deduction. According to the IRS, this is the standard deduction for our living expenses. And this is how much we made. So in reality, we only need to be taxed on the 5 bars of income instead of all 20, which we ended up paying. We paid a portion of. So the IRS compares it. For these 5 bars, only 1 should have came to us. However, we have 3 of your bars of income that we took out from your paycheck. So at the end of the year, you're left with the income you made minus the expenses, and you actually get 2 of these bars back. Because in reality, you only owed 1 bar of tax, so you get 2 bars back. And that's how you get money back from the IRS. However, if you made a lot more and you didn't pay any taxes, so let's just say our client got to keep all of the taxes, they don't get any money back and they haven't paid anything to the IRS. Wrong keyboard shortcut. They paid nothing to the IRS, so they get to keep this money at the end of the year completely, and the IRS sees that, oh, you actually had 5 bars of income, but you actually owe us this because you didn't pay us anything. So they come over and tell you, you owe us money, so that they get their 1 bar of tax regardless of what happens. So whether you pay it throughout the year, whether you overpay it throughout the year, or you underpay it, you still have to either catch up or the IRS gives you money at the end of the year, depending on how much money you have withheld from your paychecks. So if you keep owing the IRS money, definitely start having them take it out earlier in the year so that worst case scenario, you get more money back at the end instead of vice versa.